Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
So guys, let's take a look at the euro currency again. So you can see market gradually is coming to the level that we have discussed within the previous week and last session. Yesterday we have talked about it, that market should move slightly higher to keep the harmony of the pattern. And actually market stands just a few pips from the destination point. So we said that should be somewhere around 118.80, 118.90 area, where we should get some signs of the possible downward reversal. So here, at least theoretically, some players should step in on the bearish side of the market. Of course, we do not know whether this will happen or not, because it's just our suggestion that this probably should happen. The same story stands on the dollar index. So dollar index has moved slightly lower of our 93 support and now is on the way to a destination point that we also have pointed in our trade setup in our scenario. So let's take a look at the hourly chart. So here's confidence. This was minimal target. It has broken right now and turning to 92.65. That's the point that we have discussed. I said probably we should watch for somewhere at the bottom of this shoulder. So it's 90.60, 90.55, somewhere in this area. So just to keep harmony of this pattern. The same we have on the euro currency. So now the big question is whether euro will turn down here, how we could, what we could do just to not get in some trap with this expectation, and what will happen if market will not stop there and will continue to move higher. Actually, guys, the second question we mostly have answered in our weekly research, because if you'll take a look at the weekly chart, you will see that here market could form double repo sell pattern. For example, if our hand and shoulders will not work, market will break this area up and start to move up here. Yes, it even could create the new top somewhere around 121, but that will not mean yet that overall bearish expectation will be cancelled. It just will lead us to some different patterns could be formed there. And one of them is the very nicely looking double repo sell pattern on the weekly chart. That will be a very significant pattern if it will be formed, and could trigger really very significant retracement. So approximately to the 110, 111 area at least. So in the perspective, it even could be even more significant. That's why we need to estimate some trading plan, what we should watch for today, just to not be trapped in the possible upward breakout and upward continuation. Well, guys, in general, we have the same story as any other times. So we need patterns. If we will get pattern, I mean bearish reversal pattern, we could try to take the short position. If we will not get the pattern, we will not take the short position. It's very simple. That's why let's take a look at the 4-hour time frame chart. What we have? Market stands on the way up, right to the point that we have specified. So retesting of this area and just stumbling around this resistance, starting to form some bearish reversal pattern here. This will be the signs that we are all waiting for. Here, guys, a tricky moment stands with the patterns, because actually, as you can see, this action was straight right up to the 1880 area. No minor retracements, no ABCDs, nothing. So market actually hasn't formed here any preparation for reversal, no bearish reversal pattern. So this point has been achieved not by the butterflies, just straight up action. In such circumstances, guys, the only pattern that we could watch for right now is the possible double repo sell by the Judd Napoli around this area. So directional Judd Napoli pattern, because any other chances here mostly absent. As you can see, you do not have any harmonic patterns, no classical patterns actually, so nothing. That's why we could watch for only for Jod-Napoli directionals. This is the first moment that we should keep an eye on. And second moment, it's also important. We need to keep an eye on this line. This is some kind of the neckline of the previous head and shoulders pattern, right? So if somehow market will turn up and break this area and continue move higher, especially if it will break through the 1930, this is the fib resistance, 618 fib resistance of this thrust down. Don't be short. It will mean that setup, the hand shoulders stands under hazard of the destruction. Because 1930, it already will be slightly higher than the top of the left shoulder stance, as you can see. It stands approximately 90 even. So 90.30, it will be right here. And if market will break it up, this will break the harmony of this pattern and will significantly increase chances on the possible failure of this setup. That's very important. But probably this will happen only if we will not get any bearish patterns here. So that's, as you can see, these two moments have a relation between each other. So no patterns at the potential reversal point that we are waiting for will mean that the chance of upward breakout and moving above the 1930 and canceling on the hand shoulders will increase. So the second moment will be there, this consequences on the first. In this case, as I said, we will be watching for creating of the new top, or at least moving to the 2050, and creating of the potential double repo. That will be the next pattern that we'll be watching for on the weekly chart, if we will get this bullish upward continuation here. But meantime, right now, as market has reached the 1880 resistance, let's keep watching for patterns, especially for the Jod-Napoli double repo sell. That's what we'll be watching for within today and maybe tomorrow sessions.